All right, welcome to Rich Dad's Stockcast with Andy Tanner. On this show, we are going to learn the secret weapon of wealthy investors. And Andy, I'm really grateful you know that secret weapons because I would like to learn it and use that. I think from our earlier conversations, what we're really going to dig into is buybacks, stock buybacks.
Yeah.
So I think we need to start with the definition of that.
Well, maybe what we ought to do is really go back further than that and talk about private versus public. I think that's a great frame for the discussion. The way this works is there's a private company. Maybe you start a company and you decide to take your company and divide it up into shares. That's really the key to this thing. Is you got a pizza. And you're going to slice this pizza up into slices, and you're going to sell the slices to other people. So we all own the pizza together. And they call that going public, where they say, look, I'm going to take my pizza, I'm going to cut it up, and I'm going to offer shares for sale to the public. So, for example, if Warren Buffett holds See's Candies, not for sale, right? Can't buy it. If Warren Buffett holds Geico Insurance, Duracell batteries, Dairy Queen, RC Willey Furnishings, whatever he owns, they're not for sale. Okay. So when a company goes public, why would they do that? Well, I would say there's three reasons. Number one, someone wants to cash out. They build a big company. They just want to sell off pieces of it and they want to cash out. I'm going to sell, half my company in shares. I'm going to take that money and, off I go. That's one reason. That's not a real great reason to do it. Most guys wouldn't do that, but it's certainly an option. The second is to raise capital to pay off debt. Maybe they've got a lot of debt and they say, hey, how could we pay this off? Well, if we sell off part of the company to other people, it raises capital. We could pay off the debt and it'd be a more healthy company, sharing it with everybody and paying off the debt than it would be not. I don't know that's a good reason to do it, but it could be done. Third and probably most popular and the best reason to go is a guy like Elon Musk who says, look, we want to expand. We got so many ideas here that if we sell off a piece of a company, it'll influx so much cash that we can do R&D, we can grow, and we can expand. And if a person has a great idea and they don't want to get eaten up by the big guys, then that's a way to raise a ton of cash, especially in the new environment of AI. You got a great idea, but you need money to get behind it to push it to the next level. You sell off pieces of your company. So what happens is you create a number called shares outstanding. In other words, how many pieces are in the pie? And then there's another term, not to get too jargony, but there's something called the float, which is how much is out there for the public to buy. So, maybe we create 1 million shares outstanding and the company keeps 100,000 shares and 900,000 going to the float. So we have this idea of shares going out into the public that can be traded amongst each other with no control of the company, right? Coke, like Warren Buffett owns a ton of Coke shares. He owns like 5% of Apple shares. Apple can't stop him from selling those shares. Apple has no control over, Coca-Cola could not stop. Kraft Heinz could not stop Warren Buffett from selling those shares to me or you or whoever. They're out in the float. They're floating around out there.
Right.
So we talked about this expansion of the company and more pieces of the pie being put out there for sale. So what a stock buyback is a lot, the opposite of that, where they say, you know what, let's pull some shares out of the float. Let's take some shares. And instead of having them floating around there with guys like Buffett and Tanner and Greg out there buying them, let's have our company buy them and yank them out of the public sector. Now we can control those shares. We can do whatever we want with them. And that kind of concentrates the amount of shares that are there, which makes them more scarce. And just like printing money, if you print a lot of money, there's cash all over the place. It's not very valuable. It's not scarce. It's plentiful. But if you suck that money back in and the Fed takes that money back in and takes control of it where we can't get to it anymore, well, now dollars are more scarce. They're going to be more valuable. So when a company does a buyback, that means there's going to be less shares in the floating around out there, and it's going to increase their value, and it's going to tweak some numbers as well that we can get into. But basically, what a buyback is when a company says, you know what, we want to buy back some pieces of our own pizza. We want to buy back those shares and take them out of the public float. They can manipulate some numbers that way, but I don't know if it's real manipulation.
It sounds
they
like
love that word. Oh, the government.
No.
Oh, manipulation. The market's manipulated. Well, everything's freaking manipulated. I mean, and is manipulating always a negative connotation, right? A potter manipulates the clay, right? A plastic surgeon manipulates the skin on a burn victim, right? I mean, manipulation, why is that necessarily a negative thing? So,
well,
that's basically what a buyback is.
Okay. One thing that
a lot of reasons why they're cool. A lot of reasons why they're cool.
So we have a fan of buybacks. Right now, I need to remind you to go into the comment section. Leave any comments, especially questions. This one's a newer topic to me personally. And so we'd love to hear questions. And even if it's not a question about buybacks, but just a general question, it's where we get most of our topics for the show. So we are listening, and it does create great value. The other thing is Andy almost always gives us a free gift, and it always relates in some way to the show. And this week he's given us his book. I think it's your newest book, The Power of Six. And I believe you're giving go ahead.
Yeah, it's a fun one for people that want to retire. It's really about, we had a show we just did on 401ks and why it's, it's a bad retirement plan. Power 6 shows people how, it's a rat race escape plan. It's how to get out is what it is.
Now, thank you for that. But I want to really dig into this word manipulation, because even though we're talking about the power of 6 here, I have 4 questions I have that to me make a buyback sound negative. And I know you're a huge fan, but since we just talked about manipulation, I have a question for you. And that is, I've heard that it does falsely jack up prices because it's jacking up prices by sucking stocks in, not by creating more value. And the reason companies do this is so that the stock prices do go up, so the CEO gets a much bigger bonus. So it's really just a selfish thing for the leaders of the company.
That's completely untrue. So let's talk about, you mentioned value.
Yeah.
Okay, the pizza is the pizza. I had a friend talking about stock splits and reverse splits. It's a similar discussion because it has to do with the number of slices in the pizza. Look, whether you slice that pizza in 4 slices, 16 slices, 32 slices, 64, 128, 256, 512, 1024, 2048, however many times you want to slice that pizza, it's still going to weigh the same. And its caloric value, the amount of calories in it, doesn't change. So whether you have lots of slices out there or you decide to buy some of the, it's the same company. It cannot affect their earnings in a negative or positive way. Now, what it does do is change earnings per share. If there are less shares, okay, then that's going to make the earnings per share go up because there's less shares. Right. So that has nothing to do with the value, because an investor, I know what the float is. I know what the shares outstanding are. I know how much money the company's making. I know that there's been a buyback, and that would concentrate. In other words, there'd be less pieces of the pizza, so each piece would be bigger, right?
Okay.
If you take a pizza in 16 slices and you change it from 16 back to 8, each slice just became twice as value. But is that because we invented value that's not there? No, we took shares away. So it's no different than when the government issues currency. The more currency they issue, the less valuable the dollar is. The less currency they issue, the more valuable the dollar is. It's scarcity. That's all it is. So does it change? Does it change the earnings per share falsely? Are they lying about their earnings anymore? No. The earnings are the same. The number of shares is less. So the earnings per share is going to go higher, but that doesn't, I don't even know how to say it any better. It's a pizza. The pizza weighs 2 pounds. And no matter how many slices you slice, it still weighs 2 pounds.
Okay, let's stay with this pizza analogy here. One of the problems that I see with buybacks is they're spending the profits of the company to buy these shares back. When maybe as an investor, I would rather them do research and development. I would like in this pizza, I would like them to make a higher quality pepperoni, or I would like them to do a little research on, hey, should we add sausage? Will that give us more value? But instead of doing their research and development, they're buying back stocks.
Well, let's flip that around a little bit and look at both sides of the coin. First of all, if a company's going to do a buyback, what does that mean? That means you have excess cash. It means you're making money.
Right.
So right now, when a company says we're thinking about doing a buyback, if they're doing that with free cash flow, they're doing that, they got a ton of cash laying around. Now, companies are driven by their balance sheet and their income statement, their statement of cash flow. It's driven by the financial statement. And they're going to look and spend money where they think it's going to make them the most money, right? So a guy like Warren Buffett looks around, Berkshire Hathaway. He says, anything else there to buy? Anything else to buy? No, everything sucks. In fact, the best bet is to bet on ourselves. And if a company is willing to buy their own stock, what does that tell you about the company's confidence? We could buy everything all around, and we look at all these opportunities, and you know what? We feel that we're the best thing to buy right now. Why should a company be forbidden, or why is it a bad idea for them to say, hey, we're a pretty good buy right now. We should buy some of our own stock. The idea that they would not do R&D or whatever, that's just a silly idea, because they're investing in themselves. So that, to me, that's a huge positive sign. Look, if a CEO, there's this thing called insider trading.
Yeah.
And if the CEO is selling their stock, what does that tell you about their faith in the company?
They think it sucks.
But if the CEO is buying shares of her own stock, what does that tell about her faith in the company?
Yeah, great value.
So if you have if you have that opinion of insider trading, if the CFO says, man, I want to buy more of the company stock, I think this is a great investment. What better vote of confidence? Peter Lynch said this, there's no greater vote of confidence than when the people that are there are buying their own stock. Well, buyback is similar to that.
So does it imply then that the stock is undervalued?
Absolutely. In their eyes, it would be. I mean, Warren Buffett, if you want to do a little reading on this, Warren Buffett released a letter to shareholders recently, 2022, maybe 2023. I think it's 2022. I can't remember, to tell you the truth. But you know what he said? He said, a person that decries buybacks is financially illiterate. Anyone that decries a buyback is financially illiterate or a silver-tongued demagogue. That's right from his letter. So, that's a huge thing coming from a guy like Warren Buffett. The advantage, it's really, really nice, because the other critique is taxes. They say, well, they're going to screw around with taxes. Well, here's why. A company, once they buy back those shares, they can do with those shares with what they want. Well, they could pay you in a dividend, or they could pay you in shares, right? And it's interesting, because if you get paid in a dividend, you're going to get taxed as ordinary income. So if you're in a 37% tax bracket, it's a big tax thing, right? It's going to be a big tax thing. But if you do it in shares, it'd be capital gain. So, if you have an employee, for example, you could use those shares as compensation.
Right.
And the idea that it benefits the CEO, well, he's only if he's a shareholder, but I'm a shareholder too. How does it benefit him and not me if we're both stock owners? If it elevates his share price, it elevates my share price.
Right.
Warren Buffett gave this analogy in his letter, and I think it's good. He says, let's say 3 guys own a car dealership. and 2 of them are passive owners, and 1 of them is managing it. He's an active owner. So you got 3 partners. They all 3 own the car dealership. 1 of them shows up to work every day. The other 2 don't. And one of the passive investors decides he wants to sell his shares. So the other 2 buy his shares. So now the concentration of the pie, now it's owned by 2 guys instead of 3 guys. So instead of owning a third, a guy owns half. And the guy that got out, he's happy he wanted out. So what's wrong with that? That's all a buyback is. That's it. That's it. So, they say, hey, we want to buy you out. And the guys that want to sell can sell.
Okay.
Pretty simple.
That does make a lot of sense. And I actually, while you were talking, my greed alarm went off again. And I think I've got a way for the average guy like me to make money off this, but I want to run it by you. And then I'd love to, after the break, really hear you. I'm going to say rant, really hear your rant on why it is that you look for companies doing a buyback and how you profit from it.
Absolutely.
But we'll do that when we come back from break.
Let's do it.
All right. Welcome back to Rich Dad Stockcast with Andy Tanner. Thank you for staying with us after the break. I did promise you 2 things. One, I'm going to ask Andy if there's a way that the average investor can make money with buybacks. And 2, Andy is going to actually explain why he really looks at buybacks and how he uses buybacks to make money. I wouldn't call Andy the average investor, so we're gonna hit
I'm
2
very
different.
much below average investor, maybe. I don't know. Average student for sure.
Okay. So you were talking about buybacks and how CEOs and companies do these buybacks. Is there a way for me as an average investor, and let me just go back 1 step from what we were talking about, when they do these buybacks, it signals that the company is undervalued. And when they do these buybacks, the company's stocks are about to go up in price. So is there a way someone like me can know when a company is about to do buybacks so I can get in on that lower price and I can get in on the higher value?
Yes and no. Let me back up a little bit and talk about this. So one of the mistakes investors make is they look for the silver bullet, right? They're trying to find the one thing that'll make them rich, that's simple, that's easy, where they don't have to work or learn anything, right? It's the advice culture. It drives me freaking nuts, right? Give me the one thing, I want a simple list. I don't want to work hard. I don't want to learn. Basically the advice culture is lazy. Make me rich without me having to do anything. Give me a hot tip.
Right.
So the idea that the buyback is the secret sauce is a complete fantasy, okay? What it is, though, is if I look at attributes, and I have a whole bunch of things I could look at, and I see that they have been doing buyback, that's a positive. It's not a decision maker for me, but it's certainly a positive. So from a fundamental standpoint, earnings are good. Growth has been good, right? The dividend, the payout ratio on the dividend is good. I look at their EBITDA, and their EV over EBITDA is, their enterprise value over EBITDA is really good. And they've also been doing buybacks. That just gives me another reason to like them, right? So it's more like it'd be more like something on a checklist. It's like, oh, and not only that, right? So it's kind of like if you were you're telling someone about your wife. You say, well, she's the best mom, and she's the best
careful where we go here.
Yeah, she's a great lover. We'll say that. She's amazing, and not only that, she plays the piano. Oh, well, I'm not going to marry every piano player I meet. The fact she plays the piano, right? Well, that's fun around Christmas time, right? All that stuff. So it's an attribute there. Now, there's another thing that's kind of interesting. I don't know that I'll always know Warren Buffett's plans to do a buyback, or whether they announced that, or how much lead time you have. But what I can know is this: I can know where they did their buyback at. And what that tells me is that's the price. If the price, it often puts in a little bit of support. For example, if I look at Berkshire Hathaway, and I know that Warren Buffett likes to buy at that price, same with Occidental Petroleum. I know where he likes to buy it. That can often give me a little clue on where a possible floor might be. And certainly if the company is going to decide to make a buyback, that creates more demand than supply, and that can boost a price a little bit. But that's for a stock trader, right? I don't really care about price. I care about value. I care about cash flow. I care about dividends. I care about premiums. So I really don't get into the, oh, this is when the price is going to go up. I really don't care about that. I mean, it's kind of like Robert with real estate. I think he cares about rents, and fluctuations in the value of the property are going to happen.
Right.
But I don't think he's on Zillow every day saying, hey, Kim, look, our property went up, or, oh no, our property went down. They just said, did the rents come in? Did the rents come in? Oh, good. Okay. Rents came in. That's fine. So it's cash flow.
Yeah, gotcha.
And certainly a buyback would lend itself to saying, yeah, what's really cool is it can often mean that a dividend's going to go up, because if there's less shares from a cash flow standpoint, if there's now less shares out there in the float and more is held in here in the company, if the company has free cash flow, they could actually increase that dividend because they have less shareholders to pay now. And so they can take that same amount, distribute it, and that could justify, doesn't necessarily mean it's going to happen, but it could absolutely justify an increase in the dividend because you have less people out there floating around. So I think that, there's a lot of studies that have been done. The people who decry the buybacks want to tax them. That's it. Most of them are on the left side of the aisle. I'm not a political guy. I don't really care, but I'll just say it's fact that, like the late Feinstein, she was a person that would have loved to, tax the stuff. They put a 1% tax on it. Biden wants to put 4% tax on it. So the reason they're going to decry these, and well, we need to tax these because they're manipulating and they're blah, blah, blah. It's just an excuse and rhetoric. It's like Warren Buffett said, people that decry this stuff are not capitalists. Look, you can buy and sell what the heck you want to buy and sell in this world. And the idea that there's something nefarious about it, or something that is underhanded or dishonest about it, is simply people that want to tax it more. And they say, hey, we want to redistribute the wealth more, so let's put a 4% tax on buybacks. It's because they think, hey, I can give an employee shares now. I bought these here. I can give my employees a compensation. Well, that wouldn't be ordinary income. That would be capital gain, wouldn't it? So the tax situation is really the reason people are they want to invent, conspiratorial weird stuff about it to justify their platform for higher taxes so the government can have more money. And their, fiscal irresponsibility. I mean, like, they have a leg to stand on, right? They can't even balance their own budget. So what do? They're really good at taking money from individuals and corporations. It's just another way to justify a tax. And like most political rhetoric, it's a bunch of hot air. So I really trust Warren Buffett on this, because it's not just because obviously he wants to do buybacks. He's going to be biased on this. But like he said, a person who doesn't understand how these work, financially illiterate, or a silver-tongued demagogue, I think those are accurate words.
So since we're talking about manipulation again, and you mentioned it often sets the floor when they do a buyback, is it ever that it could, because generally when they buy back, it's in such a large quantity?
Well, no, it's just that I know where, like, there's certain points in a stock that I'll see value. Let's say that I like one of my favorite stocks. Well, I got a bunch, like Prudential's, like Dow is really good. If I can get Dow, or like if I can get Kraft Heinz in the low 30s instead of the high 30s, I really like that. If I can get Dow in the low 40s instead of the 50s, I really like that. So when I see stocks I like dip to a certain level, like, there's value there, I'm going to buy more. So if I know a company is profitable, and I know a company has lots of free cash flow and they're growing, and they saw value at this certain level, well, if it can sneak back down to that level again, well, that's where the company saw it as valuable. That's a clue that maybe I see it as valuable too. So it simply reveals the company's opinion about their own stock. It's like, man, our stock's cheap right now. We should buy some of our own stuff. We made all this money, when we went public. Well, here's a chance for us to buy it back, on the cheap, and have a greater concentration of that value, that we control, as opposed to being out there in the float where we can't control it.
So really, you mentioned earlier, it's just one point on a checklist, but that checklist that you're talking about is really the value investing checklist.
Yeah.
Is that fair?
Yeah. I mean, yeah. And certainly even a fundamental analyst would certainly care about what price they're paying on a buyback, that they see value. And the fundamental analyst would, scratch their head, say, that's an interesting place they bought it. A technical analyst also, though, would have an interest in where those places are. A good example is like Buffett buys Occidental Petroleum, and you can kind of see the floors where he buys lots of it because the price starts going up, with demand.
Right.
Well, the same is true with Berkshire Hathaway. Is you can kind of see where he thinks his own company is worth buying. I mean, he's going to buy, like Buffett's going to buy whatever he sees as the most valuable. And if he actually looks around and says, you know what, I don't like anything right now, I like what we're doing, concentrate in those shares. Because remember, Buffett has a lot of non-publicly traded companies
right.
that he might want to own more of. And if he buys back Berkshire shares, he has a greater concentration of wealth and value in those existing companies he owns.
So the bad news is if you're like me and you're the world's laziest investor looking for that one little trick, this is not the right trick. This is just one.
Yeah. If you're that lazy investor looking for that trick, you'll just keep looking the rest of your life because there is no easy, simple. It just drives me crazy on the internet. Here's the simple hack to make, no. If there was a simple hack, everyone would be rich. It's about study. It's about mentors. It's about giving it time and attention. The get rich quick stuff just makes me freaking nuts because nobody does it that way, right? There's no one stands at the podium after winning Entrepreneur of the Year saying, well, I'm surprised all of you didn't make it. It was so easy to do. There's teams to build. There's dragons to slay. There's mistakes to learn from. There's process. And so, buybacks, are they an important part of our financial education? Of course, we should understand them. We should understand them as voters, and we should understand them as investors. But they're not the end all be all. The fact that they're called the secret of, the wealth, the secret thing of the wealth, that's a sexy thing that people will say about them. And those that decry them will say, oh, it's their secret weapon of, nefarious activity. And no, it's simply when you go public, you expand the shares. When you buy the back, you concentrate the shares. Think of it this way. If the stock were to split, there'd be twice as many shares at half the value. If the stock were to reverse split, there'd be half as many shares at twice the value. Yes?
Yes.
So the buyback has a very similar as a reverse split. It's just becoming more concentrated and more valuable because there's less shares out there. That's it. It's not a manipulation thing. The pizza is still a 16-inch pizza. It's the same pizza.
I wanted my sausage.
Yeah, it's just sliced differently, man. That's it. It's the same pizza. You don't get to invent new earnings out of that. Your earnings per share will go up, but you have less shares, right? So earnings are higher, but shares is lower.
It's kind of the same old story. Unfortunately, it still depends on the investor, their education, how much effort they put into their education. On that level, I do want to. What's that?
But I don't see it that way, Greg. When you say, well, unfortunately, it's still the investor.
Well, you made it work. I wanted the lazy trick.
See, but here's the thing. Work is not a 4-letter word if you love what you're doing. Like I love to work hard on defense. And I love to work hard as a teacher. And I love to work hard as an author because your life's work is your happiness. And, I think about sitting around a pool all day with something with an umbrella in it. That would be boring. Like Warren Buffett never retired. He gets up at age 90 and he goes to work because he loves doing this. So I don't see people say, well, I got to work to get rich. It's exciting to build an asset column and say, I didn't win the lottery. I freaking worked for that and I learned for that. There's a satisfaction and an excitement that comes from that. So, the idea of financial education being a burden or, I got to learn something. Well, if it's chemistry, that would suck. If it's physics, that might suck unless you love chemistry and physics. So if you love investing and you get excited about it, like I do, financial education is incredible, and learning about buybacks is part of that exciting journey.
Right. Hey, I got two more things for you. One for the listener here. Andy is giving his book free. It's called The Power of Six, and that's in the description. And that also talks a lot about finding value and understanding value. But one other thing we recently did, I think it was a couple of weeks ago, Andy, a show on dividends. And you actually mentioned buybacks when you're trying to find a great dividend stock. And so I would recommend everybody go listen to that show, because Andy gets pretty
that's
clear
a good
on
companion
that.
show. Good companion show. Good call.
And you gave a free gift in that one too. I think it was actually a webinar, a web training you did on dividends, where you also talk about buybacks. So you're giving gifts right and left, but it's a great place to go look for information. So I highly recommend Andy's Power of Six book, but I also recommend Andy's dividend show. I guess our show, but really it's
it's our show, man. It's Rich Dad's show.
But so I do recommend that you also check out the dividend show and even the free web training that Andy gives in that. So with that, Andy, we should wrap this up. Once again, thank you. And as always, it's embarrassing, but I learned so much on every show. I wish one of these shows I come in with a lot of knowledge, but
you have a lot of knowledge, Greg. You're coy. You're being coy. Hey,
so,
thanks for having me. I love it. I love this every week. And again, I would echo Greg. Put comments in. We do read them, and I'll even go in and comment once in a while. People are like, "Is that the real Andy Tanner?" Some are bots. Some are really me. If it's spelled right, it's not me. If it's spelled wrong, it's probably me.
That's awesome.
All right,
Andy. I'll see you next week.
We'll see you.
Bye.
Podcast is a presentation of Rich Dad Media Network.